Yo, yo, yo. Welcome back to the channel. Wow. What the SPY up 5.5%, ES1 up 5.47% after the CPI data was released. Jerome Powell has officially pumped the bears into non existence. Let's talk about the implications of this move. Hopefully, you stick around until the end of the video. I'll make sure that I kind of give you my final thoughts at the end there because we're going to do some real time analysis and look at the macro chart. I put together a few things for us to look at here. And I want to start trying to price things in SPY a little bit more. We'll look at the futures chart as well. But I just feel like SPY is a little bit more relatable. Most of my audience is going to be more interested in SPY-based content. And so I'll always try and refer back to SPY. But normally I am using futures as context, ES1, as context to trade SPY options on a daily basis. So if you're not doing that already, make sure that you're paying attention to the ES1 or the US 500 chart, whichever you prefer. So that you just have that extra price action that's built in there, because price action is king, baby. And we're going to talk about that today. So the last time that we made a video, I said that my thoughts were that we were likely to, when would it have been? When was my last video? Probably would have been saying that we were likely to continue to trade. I remember we were likely to continue to trade within this this range here, between the green and the red line here. We're gonna remove this fib for the time being. We can add that back later. But let me make this nice and bold. And this nice and bold. And we said that we were expecting to be a little bit more range bound for the time being, because what we were going to do was we were going to stay within this downtrend and this local uptrend. And what we said was we didn't want to be too biased about which direction this was going to break. We were going to wait for that break to determine which side of the trade we were going to be taking. And I don't want to talk too much about trades, but I would rather talk about the analysis because I think that's more important. But you know, the reason an analysis is important is because this is what allows you to be able to I'll say, you know, like when SPY was going up here to this, I tweeted out saying that, you know, it was coming to test its local 707. And I would have done it on futures. So it would have been this move, I believe. Wait. No. I'm sorry. I'm messing up here. Zoom in a little bit. It would have been this move. A little bit more zoomed in. Sorry. Boom. Yep, there it is. Where you tested the 707, and it was also correlated with this downtrend, right? So you have this more macro downtrend that's playing out. And then when you zoom in, you can see that the correlation between the downtrend and the 707 is what created your top on this day. I personally, and again, this isn't like, this is just when I see a trend, a larger trend that is correlated with a Fibonacci in this way, I know that the likelihood is that you're going to see a reaction there. Most likely, you're going to have a pullback in this scenario. And so, personally, and again, I don't want to talk about trading too much. I want to talk about analysis, but I entered puts based on this correlation, right? And I was willing to risk this trend line, this little gap that's here, and maybe when I was looking at it on mobile, I might have had it drawn a different way. But overall, I entered, right? And I held them. I held the puts. You can see me tweet about it on Twitter, and it's all correlated until we came down to this downtrend here. And I called for the price action all the way through. And when we got on this downtrend, I was holding them for a little while, and I was like, you know what? I'm going to get out, and and I got out right before the end of the session. And I didn't tweet this, but I entered calls, just small calls, right? I had a lot of profit. I mean, I think I was like up like 80% or something like that on these puts. I had a lot of profits, and I used a little bit of that profit because we were going into CPI with Powell, and I was like, I know, '08 fractal and stuff like that. Like, I was definitely looking at the '08 fractal and kind of going, oh man, this is crazy. Like, if it breaks down out of here, this is going to get really ugly. But I was like, fundamentally, right? We found support on this uptrend multiple times. We've cleared the midline and closed above it. If you guys aren't familiar with the midline, it's this white trend has acted as support and resistance throughout this bear trend. So we definitely keep track of that. And also, right, you're again. I mean, this is just, come on, like you pull this fib, right? Pull from this swing low to this swing high. 707, which is our fib that we pay attention to. I mean, you're within a penny here, man. I open calls at close. Where? Yeah, at close. I open calls as we're diving down to the 707. It was a small position, nothing crazy, because I knew that we were going into this meeting. I'm not betting on a meeting. I've talked about that a million times. I'm not betting on a meeting. That's dumb. I'm not making a big bet. I was just saying, look, I'll take it. I'll take the trade. And look at what happened, right? So I'm not doing this to be like show off or whatever. Maybe that's how you're taking it. That's fine if you think that. I'm just pointing out that, like, again, man, like I've talked about this on Twitter a lot. I've talked about it on YouTube a lot. The fundamentals, maybe on the macro they matter, right? Fundamentals are a loser's game, in my opinion, if you're talking about short-term trades. If you're sitting here thinking there's nothing bullish, there's nothing fundamentally bullish about the market, why would you be bullish? But the price action was bullish. The price action was signaling strength for bulls, right? And so I'm telling you, this is how institutions communicate, okay? Like, that's just what it is. And so then Powell, pre-market, comes out and says that inflation is not as bad as it was expected to be on the report this month. And the market absolutely moons its ass off. And I entered puts. I entered puts before close here, and they're little puts, again, even littler because it was from the call profits, which were little, and I cut that down, and then I used that for these puts. But it's not, the fundamentals aren't bullish until they're bullish, and by the time that happens, it's too late. This is pre-market. Pre-market. By the time the market opened, it was already up 4%. So your fundamental the bearish fundamental analysis, if you were in a short position as a result of that analysis, you got absolutely mauled. You got destroyed. And you were shorting the bad fundamentals in this accumulative move. I mean, this is, and now, okay, so now let's talk about the larger implications, because I've been babbling for 9 minutes about not what I said that the video would be about whenever you clicked on it. I need to do a better job of that, but whatever. Hopefully you got something out of that. But I just, short-term trades, just the chart is like the king, okay? It's not just going to go red forever because the fundamentals are bearish. Everything is being priced in real time. And at the end of the day, the institutions only care about liquidity, okay? So they don't care about whatever. They're feeding you whatever story they want to feed you, whatever spin they want to feed you, whatever. And you might be going to the grocery store and buying expensive bags of chips. But that does not mean that these institutions are not going to try and make money long. That's just it. Okay? And they're going to make it short. And yeah, maybe you see new lows. I'm not saying that that's not possible. But in the meantime, you have to trade the chart that you have. Okay? All right, macro. Look, I got to say, man, this thing right now looks like, if you've been following the channel for a long time, it looks like the freaking accumulation chart out of a textbook, right? Okay? You see this? You see the correlation here? You see the similarity, right? And what phase are we in right now? We're in an LPS, I would say, in phase D of an accumulation. If you had to put a Wyckofffian spin on this, and look, you're doing exactly right. So you would call this your spring down here, right? Which is where you broke a new low on the trading range here, right? And then since then, you've just been climbing and finding new levels of support as you climb along, right? And you're using these trend lines and everything as key context for the market. But, you're clearly in an uptrend here, and you've broken this accumulation range, this more localized one, right? But this looks like a big accumulation. Now, does that mean that we're going to go to new all-time highs? No, I don't know. I don't know. Maybe. If the liquidity's there, sure. Do I know? I don't. Do I care? No, not necessarily. I'll just trade the trend. I'll trade the direction, right? And so what this could mean is that if you're able to, and I will say this too, is that we were looking at this Fibonacci and saying, hey, maybe we have this kind of dragged out rally, and then eventually you work your way up to this apex. We always look for the apex of the fib to the trend, the major trend line, right? And this trend that you're looking at up here is this longer term macro downtrend, the total downtrend, right? And this same strategy worked previously when we pulled this Fibonacci here, right? And we absolutely nailed this 707 correlated with this macro downtrend, right? And I mean, this isn't a guaranteed trade, but we know that it's a high percentage entry, right, for a short. And that's what you saw, right? And obviously, you don't want to you're not just I'm going to hold this forever until it goes down to the green line or whatever, because you didn't make it down to the green line, right? So you came down to the midline. You might have taken profit on the midline on those puts or whatever and seen the reaction. You saw a really strong bull reaction. You would have done well there. And then from there, you probably would have waited to see a break below this midline to re-enter a short position on a more macro scale. If you were if you had perfect, if you played it perfectly, right? Which is impossible. But I'm just saying, hypothetically speaking. Now, the reason that I'm saying this is because you do have, look, this 707 is all the way out here to December 20th. I'm not saying that this is impossible, but it does kind of seem rather unlikely that it would take that long for this to play out. Personally, if you do see a test of this downtrend, which you may not, also, and we'll talk about that in a second, because you could just test the 707 early, and then maybe you break this uptrend here, and then you distribute back down in this fashion. But I would say that what's possible, and this is crazy, but you could just absolutely jump on a rocket ship here, and literally something. I don't know what the news would be, guys. I don't know. Okay, but it makes a lot of sense in this climate for bears to just get absolutely withered away. Okay, and then after that, right, you would come back down, you test down here, you test this uptrend again. If you break this, you're gonna go to 430, and I don't know what the fundamentals will be. But what I'll tell you is, just like I told you, before, this chart is overall bullish. This is what we said way back here, right? We said it way back here when we were down trading in this range. Before this breakdown, what I was saying was, look, this looks accumulative, guys. I think that it's possible that you eventually come back and break this midline. And that's exactly what you did. Did I call for this move down to 340, 350, whatever? No, I didn't. But overall, the range was broken and you broke up. And since then, you are way up. And again, if you're sitting here being a fundamental bear and that's how you're trading the market short term, I mean, you've gotten crushed, man. 13.5% since then. Green. I I I would not be wanting to sit in that sort of position. So I don't know, what I see the fundamental bears on Twitter and stuff like that. Like, yeah, it's got to be brutal. I mean, hopefully you're not trading like, I don't want to see people trade this a long term short position in this way and get eaten alive like this. Like, always have a plan. And protect yourself against risk. But if you're on a longer term, like a real long term short, then you're probably okay. Whew, man, if you entered like around here, that's rough. But so anyway, yeah, I mean, those are the bullish possibilities. I think that probably, I mean, it does look like I mean, you do look really extended here, right? So like a pullback maybe to this apex down here by November 18th is also possible. I mean, I'm expecting volatility one way or another. So, if you see a breakdown back below this 390 or so on SPY, I'm going to be looking for a serious move down to 378. But I think overall, the likelihood from there is a bullish reaction. I just think like again, I'm saying this again, and I just don't see the bear. I don't see the bear like technical thesis. There's no reason to suggest until you get back down. If you get back down below this downtrend here, sure. If you break this uptrend here, sure. But until something like that happens, the dips are long opportunities up until this macro downtrend. And then from there, you kind of wait and see, you see if you break through. I mean, it's a route. It's gonna go crazy. It's gonna go like haywire to 430, and then probably 430 is not strong enough resistance. I mean, you really could be seeing 450, 460 like in relative short order after that. But it's going to be choppy, and it's not going to happen all at once. Actually, looking at this does look pretty good, though. Move down back to 380 or so. What's the correlate? Do we have a? It would be shocking if there was a fib. That looks a little rough. Maybe this bottom is where we would want to pull it from, and then we'll zoom in here. Yeah, I mean, you could see this. The golden pocket right here, 380, 381 of this move. Let's see. Yeah. So, yeah, I mean, I'd say that short term, I probably am expecting a pretty sharp pullback and bears to go back on parade after they get washed out a little bit here. Maybe up to this 397, bears get washed out, and then they crash it again and make retail chase, and then from there we'll see. Look, you break down, yeah, I'll join you in a bear party down to 364 or so here. What would that be? Pull the fib. Yeah, 361. This is all pre-structured market. Look, really what it comes down to is, hey, they come up here, do they have support? Do they have buyers? Yeah, they got buyers. All right, cool. They keep buying it up so that they can sell way up here when they don't have buyers anymore. Or they sell down here because they don't have buyers here, they sell down. If there's not buyers here, then they sell down again. They go down to the midline. And if there's not buyers there, they sell down again. That's all the market is, man. That's it. I know I've been all over the place in this video. Hopefully you enjoyed. Hopefully you gained something out of it. But what I'll say is, at the end of the day, price action in the short term is the king of all kings. And, at the end of the day, this is just institutions trying to get liquidity out of retail. But I will say that relatively on the macro scale, it's pretty bullish setup. And I'm willing to have my mind changed, and I'm willing to turn into a bear in the short term or the mid term or the long term or whatever if the proper trends are broken. That's just how I'm playing it. So hopefully you enjoyed. Hopefully, I don't even know if I said anything that makes sense as far as like what I think about the market in the short term or not. But hopefully you enjoyed the video, and until next time. Crawling in my skin, these wounds they will not heal. Wait. Fear is how I fall, confusing what is real. Just like a good time, fear is never ending. I kind of like the pullback, guys. I do. I think it would be so fun and dramatic if the next move was down to like 380. Everybody would be like, "Oh my god, the world's ending again!" And then they just go, "Pah!" That would be so fun. Oh, I'm gonna have a good time no matter what. You have a good one. Peace.